Hi, good evening, everyone, and thank you so much for joining today's exclusive webinar on all about mutual funds. My name is Ashish Asthana, and today we have already received many queries and many requests from our customers that why not to do an exclusive webinar on mutual funds, right? Wealth creation is what everyone is focusing for, everyone wish to, right? But how that wealth creation can happen, right? Wealth creation can only happen when we have our right investment avenues. We have been selected the right avenues for our savings and investments. And if we see all other asset classes, equity is the only asset class which is outperformed. If we see the last 40-year CAGR of Nifty, it ranges between 13 to 15%, which actually beats inflation and ensure your wealth creation. But at the same time, it does carry risk, right? You should know what to buy, when to exit. These questions comes into the mind, right? So that is where mutual fund comes into the picture, wherein in mutual funds, you as an investor give your funds to a mutual fund company. Fund manager decides, they have time, knowledge, and expertise. They ensure that your funds are managed much professionally, generate the returns, and give it back to you in proportion of your investments. So that is where mutual fund comes into the picture. And as per your all demand that you wanted to have an exclusive session, I'm very happy to announce, to do the honors, we have called a great personality from the industry, Mr. Vaibhav Shah, who is from Mirae Asset Mutual Fund Company. He's head of products and marketing. He is joining with us today, and he will be sharing his thought process. We'll be also looking up to the basics of mutual funds. We'll be looking after the some market views at present, what it could be, and it will be an interactive session, guys. So any questions you have in your mind, you can post it. We will be taking it post that. So we'll be having a live Q&A session as well. So Mr. Vaibhav, we welcome you to our show.
Thank you. I'm very happy to be here.
Right. And now over to you. Without taking any more time, our investors are waiting to hear from you. From an asset management company, from a mutual fund, perspective company, how things work out and what are the current market scenarios.
Sure. So, like you started your introduction that, equity is one of the best performing asset class that we've seen. And I would like to tell you that, over the last 40 years, like you said, the Sensex has, moved from 100 to about more than 41,000, in this period of 40 years, which is actually more than about 15% CAGR returns. And a lot of people still remember what happened in 2008, 10 years back, and we had the worst financial crisis. And if you were to see how markets have behaved from even 2008 to even now, you've seen market has more than doubled. So it clearly highlights to you that, market over long periods of time. I remember a beautiful saying that, the father of value investing, Mr. Ben Graham, used to say that in the short run, markets are like a voting machine, but in the long run, they are like a weighing machine, and they weigh all the pros and cons and throw out the right picture. So in the long term, markets are only earnings, slave of earnings, and they look at earnings very, very critically. And what we have seen in the markets over the last few years is that in spite of all the challenges that are there, there are enough good companies which are keeping on growing, and that has delivered significant wealth for investors. I would like to also, like you started on mutual fund. I know mutual fund is an excellent tool for investors to look at when making investments. So, like you are from the securities business, I started my career also from a broking business. And the initial 4 years was on the broking side. And, a lot of clients used to ask me what to buy and what to sell. And, we used to frequently buy and sell securities. Right. During that period, one thing that I found out was, though it generated great return, for really long-term wealth creation, you needed to hold on to securities for really long periods of time. When I started my career in 2004 to 2008, I was in the securities business. And that was a golden period where markets just ran up from 3,000 to 20,000 level. When I moved to the mutual fund side of the business, it has showed to me very clearly is that when you clearly invest in a very disciplined manner, you create significant wealth for investors. So I would like to give an example of a classic example of a fund which started in 1995 and started with an NAV of 10, and as we stand, the NAV is more than 1,100, which means it has gone up and given more than 110 times return during this 25-year period. So what it clearly also highlights is that well-managed funds are able to create significant wealth for investors, and it needs a lot of discipline for investors to keep on investing. And being on the mutual fund platform, you get advantages of you can start with a very low ticket size of 500 and multiples of 500. So it's a simple tool. A lot of investors who have not you know participated in this can start with a small ticket size, and can check how it performs, and then you can start increasing your exposure. Second, it gives you the advantage of a professional fund manager whose daily job is to select the right side of securities, and at a very low cost. So it helps you to get the advantage of a professional management. And the other advantage it gives you is diversification. Now, as we would have seen over the last 2 years, market has gone up 20%, but the mid and small cap index is down more than 20%. So there's a huge divergence in how markets have behaved. So here you are able to get a professional fund manager at a very low cost, and mutual fund portfolios are fairly diversified, 30, 40, 50 stock portfolios, and hence they help you to go down and reduce your overall risk in the portfolio. So these significant advantages a mutual fund platform provides, which can help investors in their long-term wealth creation journey.
Super. So at present, what are the market views currently? If we want to understand what are the current market updates, if you can just throw some light on that.
Sure. I think this is a question that being asset managers, we are asked very frequently. What is the view on market? And though I may get out of view today, the point is, as investors, what is the view we should understand is, like I started in 1979, Sensex was 100 and today is 41,000. And during this 40 years, we've seen significant amount of changes in government, significant amount of volatility in global markets, crude moving up all the way from $10 to $150. So huge volatility we've seen in all these kind of events. But in spite of all these events, we've seen market creating wealth. So clearly, as investors, you need to focus on investing for a long period of time. And ideally, long periods of time in equity means at least 3 and 5 years at least. And I would say the biggest number that we need to focus on is that, as I said, the Indian economy moved from to a $2.5 trillion over this last, more than 60 years since our independence. What the government is trying to do over the next 6-7 years is move from a $2.5 trillion to a $5 trillion economy, which means doubling the size of our economy in the next 6-7 years, which is what we did in 60-70 years is what we are trying to do in the next 6-7 years, which means that if market went up to 40,000 levels, I don't think so. I would be surprised if the market scales significantly higher levels from where we are. And that's a picture that people need to take, a very broad picture, that if the economy moves from a $2.5 trillion to a $5 trillion economy, then there are enough companies which will grow in size and scale and create long-term investor wealth. So overall, investors first need to take a very long view on markets, and we remain very bullish on the long view. Second is, if you see the average age of India is 27 years, which means that we are a consumption-led country, and which means again that the power of compounding will be there because the young people of India will consume, and that is again a reason why the economy will grow significantly from here. So that is the overall long-term view. Now, when you come to the short-term view, because people would like to know what will happen over the next 1 year, 2 years, what we've seen in the last 2 years, 2018-19, is that in the last 2 years, large caps have done significantly well, and mid and small caps have corrected over the last 2 years. That was because mid and small caps were trading at significant premium to large caps, which is abnormal. And during this 2-year period, mid caps have now started to trade at a discount to large cap. So here onwards, from another 2 to 3 year perspective, we believe both large cap and mid caps will do well. It will be a broad-based rally, and I think so. Investors need to be disciplined, invest staggered to take advantage of this kind of market movement, which is expected to be quite positive over the next 2 to 3 years.
That's really great. Thank you so much for such an insightful knowledge, Mr. Vaibhav. Here we are getting many questions that investors are asking. What would be a best option to invest in, whether a lump sum or a SIP?
Sure. So I know that's a very important question that you asked, whether you should invest in lump sum or SIP. So let me answer it in this way, that I think so lump sum investment is required by someone when he has a very clear view of where the markets are headed. And because of the way markets are, which is quite choppy, because of domestic news flows, because of global news flows, as well as events which are there, like crude oil, you have the budget coming in. I think so it makes sense for investor to take a staggered, disciplined approach, and that's where systematic investment is a really better way of looking at investments. I think so. Lump sum investments definitely can be looked at by investors. So if you see whenever you see a sharp correction in market and valuations become attractive, it's a time that people should do a lump sum investment because you can get the advantage of lower costs. And when the market goes up, you can make significant amount of wealth. But for investors, who are confused on how markets will move, I think so. Staggered investments is the best approach of investing. So what we tell investors is, if you have money lying in your bank account, I'm sorry, you're from the sister company, HDFC Bank, but we would say, why park your money in a savings bank account? And why don't you invest the same money in a liquid fund where you can make 2% higher than what you make in a savings bank account? And from there, you can make a staggered investment through an STP also into markets. So if someone wants to use the bank account, he can do SIP. But if someone wants to use a liquid fund to making staggered investments, he can do STP investments as well, where the returns can be 2% higher than a savings bank account. But the biggest advantage an STP or an SIP gives, it brings the entire discipline of investing. So let me give an example of what happened in 2011 to 2013. In fact, over these 2 years when we had the European crisis, most SIP returns would have looked very bad. In fact, the returns of SIPs would have been lower than savings bank account returns, about 1%, 3%. And 2014 happened, and market went up 50% in 2014. And investors who did a 3-year SIP, actually the 2011 to 2014 SIP returns became from 1 or 3% to as high as 15 to 18%, clearly highlighting the advantage an SIP gives. It helps you buy units when the markets are low, and when the markets go up, you get the entire compounding benefit. So I think so. SIP brings a lot of discipline in your way of investing, and I think so for a lot of normal investors, you would tell them that this is one of the best ways to invest. Also, I think so. What mutual fund houses have done is to provide SIP flexibility more to investors. We've started few more features in SIP is that you can top up your SIP. So as our salary keeps going up, I think so. Similarly, your investment value should go up.
Absolutely.
And so it's an SIP top up. So as your value goes up, you can increase it. Second is we brought the flexibility of doing an any day SIP. So for me, say 7th is my lucky number. I can do an SIP on 7th of the month. Or 12th is my anniversary date, so I can do a SIP on the 12th. So it provides you flexibility of choosing any date to do an SIP rather than waiting for the money to come to your bank. And the third, I think, the key advantage that I clearly see in SIPs that we are able to do is we've started something called as a goal SIP, which is something that we at Mirae are very proud to say that what happens. Let me give an example. That you want to buy a Mercedes car for yourself, and you start with an SIP of 5 years, and investing 10,000 rupees. But during the course of the time, you felt, no, let me stop this SIP after 6 months or 1 year because markets are not doing well. You may actually end up buying a scooter instead of a car. So that's very clear that you have to fix your goal and make your investments in line with your goal. And that's where clearly our goal SIP is very, very important. So each individual can choose his goal, could be buying a house, could be buying a car, could be going for a foreign vacation, and they can systematically invest till they achieve their goal. And that brings further discipline in your investment so that you don't redeem your money till your goal is achieved. So I think that these are few advantages that SIP gives. I believe both lump sum and SIP have advantages. For normal retail investors, SIP is the preferred route of investment. But when market gives you a steep correction and the opportunity to add on, that's the time you should increase your allocation to equities, and that's the time you should increase your lump sum investments also to equities.
Absolutely. That's really great. And in fact, I think every expenditure or every goal what investors have, they can convert that goal, they can achieve that goal through SIP.
Absolutely.
And not only in equity funds, but you can do SIP in liquid also. If you are in need of funds, so it's a simple example that day, I would just like to share that experience with all the investors. There was one of the customer and he was unsure about his making, when we had a discussion with him, he was unsure about making his insurance premium payments also.
Okay.
So we suggested why not to have an SIP of 2,000 rupees into liquid funds,
Correct.
which in turn make 24,000 after a year with some returns as well, which will be over and above the savings interest.
Right.
And you can simply, without any attraction of exit load, you can manage that expenditure more professionally.
Absolutely.
He was very happy and he was fond of it. He instantly started up that. And not only that, apart from that, he was overburdened because we have seen many people are also having some personal loans or some of them having home loans.
Right.
So we suggest them this route. After a year or two or a three, accumulate the corpus and make a prepayment of the home loan, which will save in return. Not only it is doing a wealth creation and helping you to earn, more than extra interest or the returns which you generate in mutual funds,
Right.
but also it helps you to save your overall EMIs and the interest as well.
No, absolutely, I agree with you. And that SIP is a disciplined approach of investing, right? So discipline is agnostic of which asset class you do. So I think all of us have a classic example that we buy gold on Akshay Tritiya. That is an example of an SIP. So you are already doing an SIP in gold. I think similarly, SIP is a way of investing. So you can do in equities, you can do in liquid funds, fixed income funds, as well to create wealth for you.
So let's move to the next question. Quite interesting questions we are getting from investors.
Sure.
How's the small cap funds performing now and future? Asked by Mr. Subramaniam.
Okay. So Mr. Subramaniam, I would like to tell you, like I started in my discussion, that the last couple of years have been quite disturbing for mid and small caps because the market, large caps would have gone up 20%, but mid and small caps on an average have corrected 20%. I think thankfully a lot of well-managed mutual funds, even in the last 2 years, have not delivered negative returns and have been able to safeguard your money. But generally, I would like to tell you, when we started 2018, that time the mid and small caps were trading at 35% premium to large caps. And as we speak now, mid and small caps are trading at 5% discount to large caps. So we've seen a 40% kind of reduction in the valuation of mid and small cap. From 2-year perspective, we see mid and small caps generating 25% earnings growth, while the large cap is expected to go on about 20% earnings growth. So from here onwards, we feel that with a 2 or a 3-year perspective, mid and small cap funds have the potential to generate higher returns. I think that the only caveat, like Ashish started the call with, is that equities as an asset class needs 3 years time frame, but mid and small caps need 5-year time frame, because because these are smaller companies in size, and when the economy goes through a lot of challenges, they need more time to recover, and that's why investors need to be slightly more patient. And so a 5-year time frame, if an investor takes in mid and small cap, I think so his experience in these funds will be much better.
Great. So next quite interesting question we are getting out here is that in case if I miss any of my SIP, will there be any charge?
Sure. So let me tell investors that there is no charge. So unlike you have when you send up in the bank, you have a check which even gets bounced. There's a charge with the bank's levies. For an SIP, if you miss out an SIP because unfortunately there was no balance in the account or for some other reason, there is no charge with the asset management company. Thus, charge to the investors. Second is that even if you miss one SIP, your subsequent SIP will go through. So let me give an example. If you miss out your January SIP, maybe because you didn't know what was the balance, you can still continue with your February SIP amount, and your SIP investments keep continuing. So till 3 SIPs are not discontinued, your SIP investments will continue, and hence there again reiterating, there are no charges that is levied to the customer.
Great. Any specific scheme that you want to talk about from Mirae Asset?
Sure. So I think so. What I would like to highlight to you is that when we make investments, I think so we should look at schemes which have long-term track record and schemes which can generate wealth across time frames. So that is where I would like to highlight 2 of our schemes. One is we have our fund, which is our oldest fund, which is created a 12-year track record. When we started the fund, we started with an NAV of 10. It has moved to now 55. So over last 12 years, you have earned more than 450% returns in the scheme, while the market has only doubled in that sense. So it has outperformed the index by about 6-7%. And again, to investors who would like to have dividend, it has consistently given dividend in 11 years. What the fund does, it invests 80% of its money in large cap companies. So it makes sure that the stability of large cap companies is there, and it gives you flexibility of investing 15 to 18% in mid and small caps, which are the emerging large cap companies. So a lot of the companies, like say for example Bajaj Finance or Kotak Bank, maybe 5 years back or 3 years back, or mid caps, but now they become large caps. So it allows us the flexibility to identify companies which are currently mid in size but have the potential to become large caps. And that's why I would say, first, if someone were to start their investment and have a first experience of Mirae, they should look at our large cap fund, which has exposure to large cap companies and a mix of mid and small. And maybe the second fund that I would like to highlight is a fund that we allow only under the SIP route, the route that we discussed, is Mirae Asset Emerging Blue Chip Fund. It has investments of 50% in large cap and 50% in mid and small cap, and allows investors the full flexibility of participating in both large cap companies and mid and small cap companies. And the fund is now going to complete 9 years track record. And again, in 8.5 years, which it has completed, it has again delivered more than 400% return versus 200% return of the benchmark. So again, significant outperformance for that. And in this fund, what is the unique thing that we've done is we allow only SIP investment, and that only up to 25,000 rupees. So we tell investors that when you come to our fund, come with a very systematic, disciplined approach, and we will try and endeavor to create wealth for you.
Absolutely great. Now many questions we are getting in terms of how can I buy and how simplified it is. So let me quickly share my computer screen and show you where you can see our mutual fund research reckoner and how simplified it is to place your transaction sitting at home, maybe from a laptop or a computer or from our mobile trading app. Right? If you haven't downloaded our mobile trading app, you can download it. It is one of the best app in the industry with least your clicks. You can place your transaction. We have made it basis the user experience. So if you haven't yet downloaded, I would suggest go to Play Store, type HDFC Securities mobile trading app, and you can install the same. Right. So now over to my computer screen and let me show you where you can find our mutual fund reckoner. So this is our website, www.hdfcsec.com. You can go to our research section, and right here you can click on mutual funds overview. Over here, every month our research team provides the reckoner, which will be a PDF format. You can open and you can see the schemes over here. In fact, this is the best time that I want to talk about. It is Q4 have already started. This is a tax saving time, and I think here ELSS really do a great justice within the category of ATC, having the least lock-in period of only 3 years, tax exemption under ATC, plus a tax-free returns after 3 years if your returns are less than 1 lakh in that financial year, and truly a wealth creating product. Right? So right here you can see in front of me, you can see this ELSS. This is the entire reckoner. You can little scroll down over here, and out here you can see Mirae Asset Tax Saver Fund, one of the really interesting fund you can see, wherein the AUM of this scheme, the fund managers are handling of customers are amounting to 2,877 crores. So almost 2,800 plus crores kind of amount the fund manager is having with a current NAV of 19.03. Right? And here you can see it has been also rated as 5-star, moderately high risk. So definitely you can look up to this fund, and you can also see the returns. 3 years return 14% CAGR, 5 years return 18% CAGR, 18.11, which is quite lucrative itself, so that you can go ahead and you can select it. Not only with this you will invest in mutual fund, you get experience of investing into mutual fund, but also it will help you to save tax, and it will, with only least lock-in period of just 3 years, you can go with it. Right? How to do that? Let me just show that to you. For that, you need to click on login, enter your login credentials. Once you enter, this is the Empowered, our basic login portal. Right? You can go on mutual funds. Under mutual funds, you have option of one time or SIP. As per your need, you can select the one. Select the relevant scheme that you want to invest in. Just click on purchase, and if you're doing a lump sum, just click on invest. Enter the amount and click on place order. Just in 3 clicks, you are good with placing your order. Similarly, with our mobile trading app also, you can click on the mutual funds tab by clicking on more option. enter select the specific scheme that you want to invest in. If you are unsure about it, you can go out here, you can type the scheme name and just click on it. The scheme name would be displayed. Just enter the amount, how much you want to invest, and click on place order. Your order would be successfully placed. Right. If you do not have, also at this point of time, I want to inform to all our investors, if you have not yet opened your HDFC Securities GMAT and trading account, still you can go ahead and you can invest in these schemes. We have launched a new platform called as Invest Now, which is exclusively for HDFC Bank savings account holder, which is available within their net banking. The only thing is that your account has to be singly held account, resident Indian account, and you need to be mutual fund KYC compliant. If these three conditions are met, you can open your Invest Now online paperless robo advisory mutual fund account just in 3 clicks in less than 30 seconds. And within the same minute, you can start your investments into ELSS or any other schemes that you wish to. Right. So considering the time constraint, we'll be able to take maybe 1 or 2 questions more. So let me see what further questions we have received. So Mr. Rodriguez have asked the question, I am on HDFC Securities website, where do I find the reckoner? I think so, Mr. Rodriguez have recently shown you on the website, you can get it in the logged in section as well, and you can get it in the pre-logged in section as well, right? However, in the logged in section, you can see once you click on this mutual funds tab on one time, right here, you can see this download report. Once you click on it, this PDF report can be downloaded, which is in the logged in section. All right. So next question we are getting, does Mirae Asset have any index funds?
Sure. So I think what we've done is, like Ashish showed that how quickly you can buy and how quickly you can do. So what we've launched is 2 ETFs that we've launched. One is a Mirae Asset Nifty 50 ETF and Mirae Asset Nifty Next 50 ETF. So index funds and ETFs are very similar in nature. The only two differences is that ETF is traded on the exchange and you can buy directly through the exchange. So you've got HDFC Securities, and you buy any shares on Infosys or Reliance. Similarly, you can buy a Nifty 50 or a Nifty Next 50 ETF very quickly and very easily. And the advantage of ETF provides to an investor, it gives them exposure to the large cap index like Nifty at very low cost. In fact, the expense ratio of our fund is only 7 basis points, clearly telling you that whatever returns that you can see on the television of what the Nifty is able to generate is what the fund will also try to endeavor. Index fund is a fund which is similar in nature like an ETF, but it is on the mutual fund platform, and you can buy and sell like a mutual fund. The only reason why we preferred the ETF route over the index fund route is that because we've seen significant amount of volatility in market, and ETF lets you get the advantage of a stock. So when say the markets are down, and you can say today suppose market is down 500 points, and you can buy the fund when the market is down 500 points, and assuming by afternoon market recovers and actually goes up 500 points, when you buy an index fund, you are actually able to not participate in the intraday movement which had happened. While the ETF is clearly able to take this advantage, which is present in markets. And that's why we preferred the ETF route of investing than the index fund. But both index funds as well as ETFs are great way of passively investing for customers at a very low cost. And we remain very bullish that for retail investors who want to simply copy whatever returns the Sensex or Nifty is generated, they can look at products like the Nifty 50 ETF or the Nifty Next 50 ETFs, and that's why we've launched these products.
Super. So next question we are getting, how can I redeem my holdings? So let me show you. You just have to click on portfolio. Here, all the portfolio details are available. You can go on a product specific, that's for mutual funds. Once you click on mutual funds, you'll be able to see your holdings out here, right? You can see this minus button. You can click on it. This is for redemption, and you can place your redemption order. Number of units that you can check from your portfolio, how many units you have been accumulated, and then you can simply place your sell order, right? And if you're using Invest Now platform, then within the net banking, you need to click on Invest Now, and there we have an option of reports. Under the reports, there will be an option of my holding statement. You need to click on it, and then you need to click on the edit icon, which is just before the scheme name. And once you click on it, you get a drop down which will show whether you want to add more or you want to withdraw. Withdraw is nothing but a redemption. And from there, you can do SWP and S2P as well, right? However, just for your information, SWP, STP, and switch will happen within the same fund house. It cannot be across the AMCs, for your information, right? And many questions we have been receiving in terms of they have missed out the initial part, they want to watch it again. Can I watch the recording? So let me tell you, yes, recording would be available on the same link after an hour's time. You can just click on it. If you are watching it from your mobile, open it on your mobile browser, because GoTo app is only to access the live webinar so that you can interact with us, put your questions. However, to watch the recording, it will be available on the link which you need to open on your mobile browser, maybe a Chrome or a Safari. And if you're using a computer or a laptop, then simply click on that link after an hour's time, enter the details which screen will ask, and you will be able to view the recording. However, the same would be uploaded on our YouTube channel as well very soon. So if you haven't yet subscribed to our channel, you can go to our channel, subscribe for it. And there we have a playlist of webinars wherein you can watch the earlier recorded webinars as well. And even this will be uploaded on our YouTube channel very soon. So that's all for now, viewers. Thank you so much for joining in large this evening. We highly appreciate your time and patience. And Mr. Vaibhav, thank you so very much for joining in and giving such an insightful knowledge about the schemes, about the markets, to our investors.
Sure. Thanks a lot.
Thank you so much, and have a wonderful trading day ahead. Thank you. Bye-bye.
Happy investing.